Hey everyone, my name is Peter and I'm a passionate wealth builder. I use stock options and properties as my investment vehicles, and I record and document one of my option trades every single day for the benefit of everyone. And today is trade number 208. But before I talk about that, I just wanted to have a word about the overall market movement in the last week or so. So we can see last week the price of SPY dropped from 410 all the way down to below 380. There was a massive drop. It caused a fair bit of panic amongst a lot of the traders, but then we did see a nice bounce back today, and I was actually betting on that bounce back, so that did a lot of good for my trading accounts. So let's talk about my trade number 208. I did a calendar spread against CarMax. CarMax is going to have earnings before open tomorrow. We can see that the price is very low compared to the historical price levels for this stock. Going below 60 has been a rare occurrence in the last 5-7 years for this stock. So I am a little bit bullish on this stock. So I purchased a calendar spread. Basically what I did, what it means is that I sold the December 23rd expiration $55 put option, and I purchased the February 17 $55 put option, and that cost me $1.78. And why did I do that? Why would I purchase an option? It's because what I'm banking on is that the price is going to remain more or less around the same level or goes higher. And that means the put option that I sold is going to expire in 2 days, and it will expire worthless. So currently it's trading around the 240 mark. So the February $55 put option, I purchased it for about 410, 415. So the idea is that because the volatility for the option closer to expiration is very high compared to the one further away from today's date, I will be able to pocket a fairly nice profit if the direction is good because of the volatility crash that we can expect after the earnings. So that is my trade number 208. Calendar spreads can be a little bit complex to understand for those who are new to options trading, but it is one of the strategies that can work really well. Now, if this trade doesn't work out tomorrow after the earnings, then I can always just wait a little bit and then roll my position, roll it to let's say next week. So if it, just for argument's sake, take a look at the December 23rd option at $55. It is trading around the 240 as I mentioned earlier. And if we go out 1 week and we look at the same strike price, the 55, then we can see that it's trading between 250 and 295. So we can probably get a feel around the 260, 270. So it does have additional credits in it. So if this trade doesn't work out in 2 days, then I can always just roll my December 23rd position to December 30th and then just keep rolling it. I have several weeks before I reach the February 17, and it's not consuming much of my buying power, so there is very, very low risk in this trade. So I like this one. The other one that I wanted to point out was Nike. Nike had an earnings yesterday, and the price went from about 203 to 115, massive jump there, and that basically allowed me to generate a very, very healthy profit. I sold the $90 put option expiring in January, and I collected $1.24 credit. and I was able to close the deal at 10 cents, and that basically means an annualized profit of 4,608. So that was a beautiful trade in 24 hours. Cannot get any better than that. And the other one that I was able to close today was EWZ. I opened this trade on the 12th and I sold the $27 put option. It didn't really work out for me for a few days. As we can see, when I sold the 27, the price was still at 29. But then what happened after that is the price dropped. EWZ. So we can see that the 29, so at that point, that's when I sold the 27, and then we saw this huge drop. So I had to wait a little bit to see this trade generate some profit. So the initial premium that I collected was 72 cents, and then when I rolled my position to January, I collected an additional 89-cent credit. So I ended up with $1.61, and today I was able to close it at 71 cents for an annualized profit of 539%. So very, very nice return there as well. And yeah, I only had to wait 10 days for this trade, or 9 days for this trade to produce a nice profit. So that wraps up my video for today. I hope you enjoyed it. I hope that you learned something from it. If you're new to my channel, then please press the like button and subscribe and spread the word. Have a great one. Thank you.